Welcome everyone to Confluence 3.0. It's been a while. I'm pretty sure it's long overdue. Everybody has been waiting for this video for quite a while now. And it's not as if it's anything, mind blowing, but at the same time, I feel like it's such a refresher because I drop these videos like once a year. Like how I have Confluence 1.0 that I came out with in 2015, and then Confluence 2.0, and then Confluence 2.5, and then Confluence 2.9. If you haven't seen those past videos, then you shouldn't be watching this video. Just like how I said that in Confluence 2.9, you have to actually understand like my entire journey. You know what I'm saying? And that's exactly why I actually keep all of my videos on like Wall Street Academy, all webinars and everything else, so people can actually understand like my journey as to when I started, how I'm developing my style over time, what I'm using, what I'm not using, what I'm looking at, what I'm not looking at, what I'm prioritizing when it comes to like my technicals. All that shit matters, you know what I'm saying? So at the same time, like you have to pretty much understand the person's journey. Like if a person just like watched Confluence 2.9 or even this video 3.0, they're gonna understand only so much, you know what I'm saying? Because even when it comes to when I'm breaking down the charts, like in this video, I'm not gonna slow down all the time, just kind of explain as to why I'm doing this and doing that. You should pretty much already be mostly familiar with a lot of the things that I'm going over, especially like if you're you especially if you've done the full Wall Street Academy courses, because that's like where you actually get the foundation and develop as a person over time as well. Like it's obvious that you might not use every little thing what I'm using in my charts now. You know what I'm saying? Because remember, like it's my style. But at the end of the day, like people actually develop some kind of personality within themselves on the charts as well over time. Like they might be using a different color. They might be using different kind of moving averages. Like that's completely fine. Like I don't really care about that. At the same time, like whatever works for that person works for that person. And over time, I feel like you gotta accept that, And even like when I first started trading, like back in late 2014, like everybody was trading differently, and everybody was always like criticizing a person for how they're trading and how they're seeing the charts. But you gotta understand, like everybody sees this entire chart differently. You know what I'm saying? Like all that really matters is, are you going in the right direction? That's what it all comes down to at the end of the day. And I feel like that's what happens when you're like maturing as a trader. You know what I'm saying? Less bashing and like less time for BS. Just fucking make profit. Make profit, withdraw, and live your life. You know what I'm saying? Like that's what it comes down to at the end of the day, because I feel like some people just like lose sight of what trading is really all about, And I'm pretty sure everyone that's watching this video now can actually agree with me on that same exact subject. Like people forget what trading's all about, Some people, well, a lot of people now actually, they start trading just to want to post profits on Instagram and Facebook, and I'm pretty sure everyone can agree with me on that. Like they start trading to make profits on. Okay, this is the cycle right here. They learn how to trade to want to post on Instagram and Facebook, and that's it. You know what I'm saying? Like they try to learn to want to post, but not really take advantage of it. Like you will see people that's trading, and they're using the same lot sizes for years. Like fuck, like where's the level up? You know what I'm saying? Like you could notice like certain shit that's like so obvious at times. Like yo, like are you really growing as a trader? Like if you're growing as a trader, you'll see, over time they're making more profit. You know what I'm saying? Their analysis is a bit more sharp. You know what I'm saying? Like they're spending less time on the charts and like more time in their real life, versus actually 3, 4, 5 years go by and then the person is still using the same lot sizes. Nothing is really developing. You know what I'm saying? Like what's getting better about your style or how you're seeing the charts? Like you got to always be able to develop more over time or every single month. Like what are you developing in your style? And I feel like I've done a really great job at that. Over the years, every single year, it's more and more profits. You know what I'm saying? It's bigger days. You know, like in 2015, like my biggest day in 2015 was probably like $1,000 a day. You know what I'm saying? Or like a 3-4K week. In 2016, I had my 30K week in October. In 2017, I had, what was it, like a, probably, I think it was, what was it? I think it was a 74K. Okay, in 2018, in January, I had a 50K week. In February, I had a 74K week. You know what I'm saying? So it's like, I'm developing. I'm getting better. I'm getting better at something. You know what I'm saying? So it's like, you got to always try to get better at whatever you're doing inside your trading style, no matter what it is. More profits, more pips, whatever. Are you reading the charts cleaner? It doesn't even matter. You know what I'm saying? So like, once you do all that, all this shit right here, all these candles and everything else, they'll seem second nature to you. You know what I'm saying? Like, when I say second nature, I mean like you actually get on these charts and just like really break the shit down in a few minutes. You know, just like how I do my CBDs, like that actually helps me a lot more than it does the people that's actually watching the CBDs, because you know it's making me actually be on the charts a lot more compared to when I'm not doing them. I'm on the charts here and there. You know, not really being as disciplined as I should be. But at the same time, like once I actually do my CBD, I pretty much have what I'm looking at within the market out there inside the world. So at the same time, just always try to like, you know, document how you're taking your trades, how you're going about a certain kind of move, something, you know what I'm saying? Just try to always get better at something in your trading style. Like you shouldn't, you know, if you're using, let's say a 0.10 this year, bruh, by next year, you know, you should be upping it to at least a 0.20, 0.25, 0.50, 0.75, a standard, 2 lots, something. You know what I'm saying? Like something has to get better, okay? And that's just like a quick rant, because I feel like, you know, that's like one thing that, you know, I'm not seeing enough of at times. And I'm not just talking about like in Wall Street Academy. I'm talking about just like, you know, in like the trading niche overall. You know what I'm saying? A lot of people just, you know, they're not really trying to develop their style. Like they see it as like a quick little money pit, but do you really want to become like a professional trader though? You know what I'm saying? A trader that actually get on the charts, not really worrying about anything else, not worrying about bullshit companies and everything, pretty much make money off of it. Like you can make money from your fucking phone, your fucking laptop. You don't need to talk to anybody. You don't got to get along with anyone. All that you know is that the charts and my knowledge is the shit that makes me money. That's it, you know. And once you actually have that mindset, I feel like, you know, you don't really care too much to hear bullshit. You know what I'm saying? You could tell bullshit before it even comes to you, because you pretty much already understand that, like, yo, like you don't have to do all this just to make profits out of the market. It's all based on the skill set. That's it. But you got to pretty much, you know, have that time to you know, develop that skill set, which takes time. You know, don't ever put a time limit on how much you're studying. Once you put a time limit on how much you're studying, like let's say if you're that person that says I'm gonna study an hour a day or 2 hours a day, you just kind of fucked up. I feel like, in my opinion, and I'm all about opinions. In my opinion, you pretty much fucked up just by, you know, giving yourself a time limit as to how long you're studying. You know what I'm saying? Mainly because if you're in love with a skill set, right? Or even like, let's say if you're in love with basketball and you're outside shooting hoops the entire time, you're going to keep on shooting hoops, you know, all freaking day, if anything, because you want to get that shot better. You know, trading, same concept. Like in basketball, you might shoot until the sun goes down, until you can't shoot anymore. It's dark. In trading, same concept. You know what I'm saying? You're going to, you know, analyze, backtest, until the market is until you probably fall asleep, pass out right where the computer is or something. You know what I'm saying? Like you're giving yourself that infinite amount of time to pretty much, you know, fall in love with the craft. And that's like one of the biggest things. You know what I'm saying? You got to fall in love with this shit right here. It's not just, it's a hobby. Nah, you got to fall in love with this shit if you're really trying to actually really, you know, grasp it like how you plan on grasping it. So you can have that level up like how you're envisioning. You know what I'm saying? But enough of my rant, man. You know what I'm saying? Like, you guys already know how I get. I'm just like really passionate about what I do and how I go about it because I've seen how much lives it can change in a short amount of time. You know what I'm saying? But it's really based on the person. It has nothing to do with anybody else, no kind of other family member, no kind of other friend. It's really just on that individual to decide on if they want to take this shit seriously or just play around and then be the same place where you are in trading now. You know what I'm saying? Like within a year. Like if you are taking it seriously, you're gonna grow, you know, within a few months or a year or so and on. But at the end of the day, like you're growing in some kind of way, no matter how small it is. But it's all on the person. Okay? All right. So let's get on these charts though, man. Let's get on these charts. I'm gonna go over like a few examples of some setups. Probably some stuff on UJ. Probably some stuff on AU because I was, you know, reanalyzing it from you know, the past moves of this week which was pretty ridiculous. And yeah, and then go from there. But at the same time, like I feel like the market itself has, you know, it's always kind of crazy around these times of the year. You know, it's the end of the year. You know, everybody is just chilling. You know, things are just kind of like, I wouldn't really say falling apart, but at the same time, like where the economy is at, like right now, you know, the chance of, you know, an upcoming, you know, recession in some kind of way, quote unquote, you know what I'm saying? It's more than possible, you know what I'm saying? Because things are at its all-time high, especially like when it comes to the value of the dollar and so on, and like how the interest rates are going through the housing market. And, you know what I'm saying? Like all kind of shit. It's just a lot of things that actually play a part. So, you know, you gotta always try to keep up to date with, you know, the economy. One site that actually I recommend also, you could also go on Market Watch. Market Watch is just a site that has a lot of financial stuff. You could check on your currencies, you could check on your stocks, you could check on your indexes, you could check on all kind of shit and everything. But at the same time, like it's very, very helpful. You know what I'm saying? So I'll definitely recommend, you know, this website as well. You guys already know Forex Factory is another one. You know, just kind of like keep up to date with those certain things. I don't really trade news. I don't really give a fuck about news, but at the same time, it's kind of cool to just stay up to date with all the economics of shit, right? And for everyone that has glasses, I'm gonna also speak on some glasses to get as well. I'm not getting paid by the company, but at the same time, I feel like it's very, very helpful just because we're always on the computer, and you know, vision is everything. We can't see candles without our eyes. So I mean, gotta make sure those stay intact for as long as possible. All right. So right now, I'm gonna just break down some stuff on UJ as to what I've been seeing for quite a while, and you know, the opportunities that you could have took based on these kind of moves inside the market right here. All right. So at the end of the day, like remember, you gotta always understand, like, you know, once you get on the charts, you gotta just figure out where the fuck am I? You know what I'm saying? Like, because I feel like some people, they get on charts and they don't really have, you know, like a set way on how they're looking at a certain kind of market, like what their first step is to pretty much, you know, start that analysis. Okay. So if I just zoom out like real quick, right? And these are just like my monthly key levels and everything else. I go over like this kind of stuff more in depth when it comes to like the 5-day course, because I have time to pretty much break all this stuff down, and you know, it's better that way, honestly. Like it's something it's helpful, but at the same time, they stay on my charts for quite a while. I don't have to touch them. Okay. So this right here is overall UJ's entire move. This right here is on the weekly time frame. Okay. So the biggest thing is like you got to always understand as to where you are in the current market. Okay. So this right here was a previous point of major level of resistance on that weekly time frame, which we could actually use the random line for this area. All right. It's not going to be the highest wick. I like to put it on a median wick. Find that point and mark it off right there. Okay. Which means that anywhere that comes on this same exact line is a point of resistance, but at the same time, that's where you're actually seeing your tested areas based off of this weekly time frame, which means that based on a weekly chart, it's considered as a tested candle. It's not broken. It's just bouncing off of that previous level of resistance, which was based off of that random line. So around here, right, we had that bullish candle, the doji, and the bearish candle. That was the first test, okay? And that area actually maintained for quite a while, like weeks and weeks and weeks at a time. So if we even break this chart down, we can see things a bit more in depth when it comes to that same exact area, okay? This line is once again based on that weekly time frame. So pretty much at the end of the day, like things that we actually analyze on these lower time frames, we can only validate if we go back on that weekly time frame to see if that area was tested, to make sure that it's being respected based off of that weekly level of resistance. Okay, so around this area, all right here, remember, we're gonna see all this, yes, but at the same time, once we understand that what it's actually based on, we're not gonna really get scared a lot of times when it comes to this area. But you could also, try to, mark off a lot of these exhaustion areas based off of these higher time frames as well, right? All of these high ass like wicks on this previous higher high point inside this market. Let's say you analyze all this and mark off like a point of exhaustion based off of the highest wick and the lowest wick of that past area. So everything that was inside this market, all right here, the highest point right there, and this was based off of right here, the lowest point, which is at the bottom of this area, and all of these wicks are inside this point, which means that whenever the market was inside this zone right here, it was pretty much struggling the entire time period, which means that it gives you some sort of confluence in that area, okay? So we were watching all that the entire time, but also when it came up to actually getting to that point right there, right? If we even analyze this area all right here, which was once a downtrend, it transitioned to an uptrend. You had your lower lows, your lower highs, your lower lows, your lower highs, your lower lows, your lower highs the entire time period. But also this right here was your last point of a little pullback based off of this entire area. So mark this area off. All right. And as you can see, lower low, lower high, lower low, lower high, lower low, lower high, and a little pullback, which was a little higher low point inside this case. But at the same time, it was a little pullback, which could have been seen a bit more based off of the H4 time frame, since it has a lot more details inside the area. All right, see that pullback? Perfect. Okay, so technically, when this area actually was broken based off of this daily time frame, all right, remember like, this right here is daily structure right here. So once this area was actually broken based off of this daily time frame, we had that break, which was technically these candles all right here. All right, I'll put this different color. I'll put these reds. Okay. So right here was that break right there, right? At first, it was still a tested candle, but so at the end of the day, like even when this area actually happened, you were still more on a selling type of bias, because at the end of the day, like this area was not broken yet. But at the same time, it wasn't broken on this time frame, but on a lower time frame like the H4 time frame, you would see that this area, it starts to slowly transition first based off of this H4 time frame, because this had an actual a pullback based off this H4. So technically, you had this area start to break. So once you had these areas start to actually slowly break, because remember, it's a ripple effect. You know what I'm saying? It's all a big ripple effect. So once you actually understand like the cycle that has to happen, H4 is obviously going to break before the daily chart. You know what I'm saying? That's obvious. Once you actually understand that, you're slowly kind of gauging as to what could possibly happen. Right? Once you knew that, you understood that, okay, on the H4 time frame, yes, it pretty much broke that previous level of resistance, but it's still technically on a downtrend based off that daily time frame, because it's not broken yet on that daily structure, right? Your bias was still bearish the entire time period. So if you even go on, like let's say that same exact area, which was right over here, all right? The entire time period that you're analyzing all this, it was still red over blue the entire time, which kind of showed you that a lot of the momentum for that in certain kind of area was still overall bearish. Okay, and even on the daily time frame, around that same exact area as well, you were still seeing a lot of bearish movement. You know what I'm saying? It actually came up above that area, but at the same time, you actually understand that the weekly time frame was still red over blue. That could have been just like a quick move, but at the same time, it could have also retraced fully and made that area a full test as well, and made this area not actually cross with your SMA and EMAs. All right. So you actually seeing that it actually broke based off of that H4 time frame. It actually tested this entire area all right here, and then it actually came back down to respect this previous level of resistance, now turns support right there, which means that that's also some sort of confluence as well, based off of your point A to point B on your fibs, right? Probably like right here. Oh, let's just see. Let's get to the highest point first, just in case. All right, let's see which one looks better. Okay, pretty much the same concept overall. So once this area actually broke right here, you're still monitoring that same exact area based off of that daily time frame. You know what I'm saying? Remember, like at the same time, like it's gonna be a lot faster moving parts when it comes to this H4 time frame. So you understood that pretty much around this entire area, yes, it pretty much had a counter trend, but at the same time, the counter trend had a lot more bullish momentum the entire time, which maintained that uptrend based off of like a M30 time frame in this case to actually make that counter trend go higher. So if we actually break this area down, like let's say on let's go on like the H1 real quick to see like what's happening on that area. Okay, so this right here was the H1 time frame. Okay, which means that around this entire area or right here on H1, you had a break of this H1 level of resistance, like right here, right? So technically, H1 structure broke. You had a 23.6% based off of this H1 fib. Let's see. All right. Like it was close to 23.6%, which means that it was still a lot of bullish momentum there based off of that area. And also the estimated EMAs were not crossed yet either. But around like this last retrace that it actually did, that was a steeper retrace right here. Let's see. All right. So once this area actually made a new high point, you modified this fib to the new high point, which was right here at the top of that bullish wick on that counter trend, right? That counter trend was your first sign that, you know, it starts to actually have a little pullback to even continue this overall uptrend based off this lower time frame. Because remember, this entire time that you were analyzing all of this on the H4 time frame, it actually still maintained that blue over red type of momentum. So technically, the entire time that you're seeing all that movement on that H1 time frame, it's still having a lot of bullish momentum based off of that H4 structure this entire time. So all right here was still showing a lot more bullish than it was bearish based off of your SMA and EMAs. And look at how the SMA and EMAs were pointed. They're pointing up the entire time, right? Even on that counter trend, like right here, right? Nothing really pointed down. Even the SMA was still pointing upwards the entire time period. It never ever said down, right? It was a little bit sideways, some sideways movement, but at the end of the day, it still never pointed down, which said that the average movement, moving average movement, it was still showing more bullish than bearish for this entire area all right here. So that actually continued to actually break that level of resistance to actually make that new higher high based off of that H4 structure, right? And once that was actually made, this first counter trend was your first level of support that it actually made, but also it gave you a lot of seller exhaustion as well. That came down to that level of resistance, now turned support. So technically that area is confluence, all right? So, yep, so like let's just put this area right here as, all right, some sort of confluence around that 61.8, so. All right. Remember, confluence is just when things line up with each other. Like that's like really, that's all that it is. If you have two kind of technicals that pretty much, you know, they line up with each other, that's what confluence is. Multiple confirmation based off of a current situation. Okay. All right. So this around this area all right here, you had this area like bouncing around that 61.8% retrace, which means that this right here was a bearish candle. The doji, which kind of was more neutral in this sense because it wasn't like a full bearish candle. It kind of showed you that there was a lot more buyers than sellers inside that bearish candle the entire time period. And this next bullish candle held that area up to actually still respect that 61.8% level, which kind of gives you like a moderate type of push. Okay. So if we break this area down on, let's say, the M30 time frame now. Okay, so this right here was the counter trend area based off of that entire point of newfound support. So within this entire area all right here, you are seeing all of these. Let me just I'm just gonna mark these as like lower high points, lower high points, lower high points, lower high points. And also you can put your random line as well here. remember what time frame you actually drew these on. This right here was based off this time frame. So technically this area was still being respected for that lower high point, right? Then you had your lower, oh wow, okay. Then you had your lower high point right here as well. So technically this right here was the only lower high point that was actually broken. So technically that's when you first started to see your transition based off of that area to actually say that, okay, it could possibly be transitioning now. But remember, like while all this was happening, when this area actually broke that previous level of resistance, which was the lower high point, you also had on that higher time frame, which we could see like right here. And this is always good. Like this is why I always, I recommend Pro to a lot of people, because you can actually, you could break shit down to actually get and see these kind of views. So we're gonna put M30 on this time frame, on this side of the chart, and then on the other chart we're gonna put H4. I'm trying to go back to see. Okay. Okay. On this chart we're gonna put it on the what we said H4. Okay, so around that same exact area, right? You had this happening all right now, right? You had your SMA and EMA still pointing down the entire time period, right? But then you had some bullish candles that kicked in. But look at your SMA and EMAs. It started to actually curve a tad bit. That shows that there was a lot more bullish movement happening around this area. So the average movement for that area was pointing up, all right? So this area actually got respected for a tad bit. But look at how these candles formed though, right? You had that bullish candle, the doji. But along these two bullish candles, which one was more in control though? The bullish candle still, right? That actually maintained that level of support, which was on probably like, let's say the M5 time frame or something like that. You had a level of support that was still being respected for an uptrend the entire time period. But also, while all this was going on, this first candle right here, right? Right here, you have what? Seller exhaustion, you know what I'm saying? Which was just a counter trend based off of that lower time frame. So technically, even when you've seen this area right here happen based off of this higher time frame, your bias has not shifted yet, because you're still maintaining a certain kind of structure on that lower time frame. Excuse me. All right. So even when you've seen this the seller's exhaustion type of candle, you were still having a downtrend on that lower time frame and still a lot of bearish movement on that lower time frame. So technically, you were still looking for a sell opportunity, regardless of the fact of how it looked on this higher time frame. So that actually happened. It actually was pushing back down to actually make some sort of new lower low, but it actually got respected, making some sort of higher low point. So when you started seeing first that seller exhaustion, which was one clue, then you had a higher low point, which was like right here with some seller exhaustion, like right here as well, which was just another seller exhaustion type of candle right here, on seller exhaustion on that bearish candle, right? This was the second area. Let's just put this area orange, if anything. Actually green. Okay, so that was the second area, which was like a higher low point on that lower time frame. So technically, you're seeing slowly, the buyers are slowly starting to get stronger inside that entire area. And on the H4 time frame, our case was it was broken level of resistance and now turned support, which was being respected, but also confluence along that 61.8% area, which was on your fibs based on that H4 structure. Okay? So remember, we actually have to understand the higher time and the lower time to pretty much make things a lot clearer for everyone. Okay? So when all this happened, you actually bounced it around this area for quite a while. It actually was bouncing on that level of resistance for a little bit until it pretty much, it broke that previous level of resistance, which was the lower high point right here, which then gave you all this bullish momentum on your moving averages the entire time period. Okay? So until you actually had some sort of like good candle that said that there was more buyers out of market, which was, a sign that you could actually took based off of, waiting until the market actually closed beyond this point right here, right? Anything that was pretty much above this area all right here, which was above this previous candle, told you that there was a lot more buyers inside the market than sellers for that time period. So let's just like take this off real quick and clear some of this thing up. Okay. Okay. So all right here, right? This candle right here was pretty much closing beyond this area, which means that anything that was beyond this point was your buying opportunities, which could have been first your first buying opportunity could have been right here, which was your first bullish variation that you had, because this candle right here that you've seen first had a lot more buyer's exhaustion, which was not something really appealing, to the eye, to actually want to get into a buyer opportunity, honestly. Unless you actually went down to like the M5 chart, which had some sort of minor pullback, which respected a certain level of support the entire time period, never ever broke that area for that level of support around that buyer's exhaustion area. But based off this M30 time frame, you have a lot more volume in the candles versus the M5, the M1. Those time frames are perfectly fine to enter off of, but you got to understand, like the amount of volume that's in those candles are not that much. You know what I'm saying? Compared to you looking at an M30 candle or M15 candle, you have a lot more volume packed inside that one candle versus those lower time frames. Okay. So the entire time period that you're doing all this, you're pretty much just still understanding that you're still at the first higher low point based off that higher time frame to then get to your higher high point, which was that negative 27%, which I use for my projections. I don't really use the expansions all too much at the end of the day. I like to actually, I remember I was using them a lot on Confluence 2.5, I think, or 2.0, I can't remember. But I feel like analyzing your overall structure on like a certain time frame, it could have been on H4, daily chart, whatever. You could have that projection still in mind the entire time. So the entire time that we were analyzing all this on lower time frames and trying to actually get into that entry opportunity, our projection was still based off that H4 structure, negative 27% for that target point for this entire area. So the entire time that we're doing all this, you're still focusing on the main aspect that you still have a projection based off this higher time frame. Okay. So this area actually, you had this area for a good, let's say, a good like maximum like 49 pips, but you would have probably settled with like around, let's say, like 30 pips or so on that one move. But end of the day, your bias is still the same. Your projection is still the same. Things are still being respected based off of this overall move, because this right here is technically your first higher low point inside this entire move, because all these areas all right here were just your like a negative 27. They were just 23.6s the entire time, which was minor retrace the entire time. So even when you got back down to this area right here, you could have used this past level of little resistance as a level of support. All right, and that's the thing, that you got to always be able to adapt within the market. You know what I'm saying? Like, it's not going to be a set way on how we're analyzing the charts every single time. Things have to be pretty much adapted as the market is developing, because things do change, but you got to always understand where you are on the higher time frame. So when you're on lower time frames, you're clear as to what's going on. Okay. So even when you, like right here, you're still having the same bias the entire time period, regardless of the fact, right? And this right here was like that big push on that higher time frame. But even when all this happened, look at this though. Like when all this was going on, this right here was the daily chart. All right. Daily structure been shifted. You had your SMA and EMA cross on that daily time frame, which meant that ever since we had this point, like right here, like this big push, SMA and EMAs maintained that bullish sort of flow on the SMA and EMAs the entire time period. So while you're seeing all of this movement, you're still understanding that even when all this is going on, you're still more bullish than bearish at the end of the day. So you're not really looking for major sell opportunities, because your overall structure now has shifted to a bullish type of structure flow. Okay. So when all this was going on here, you had that seller's exhaustion once again. All right. You could actually analyze this area for like a minor level of resistance. All right. And then just waited for some sort of bullish type of momentum to actually kick inside the market, which could have been either after this bullish candle like right here, which could have been like 1, 2, 3 on your bullish variations. Or if you want to wait for an extra bit of volume to kick inside a market, you could actually got in on this candle like right here. Both were kind of okay when it came down to the pattern, but at the same time, you could have definitely brought that down to like the M15 time frame to actually took advantage of that area. Okay. And yeah, and then you pretty much had the projection to actually take that area up to that negative 27%, which you could have maintained on either the M30 time frame, and then analyze all of these as 23.6 the entire time until you got to that target all the way up there. You know what I'm saying? So it's like, it's always, being able to pretty much adapt inside this kind of market the entire time to really, really benefit from, what could actually happen inside the future of the market. Okay. And even when you were like all the way up here on the UJ, this right here was an analysis that I did, but then again, I kind of went against certain things, mainly because the bullish momentum maintained on a higher time frame, such as the weekly. So when you were analyzing all of this, you understood that this area where the blue line is was an area that got respected many times. And as you can see, like when this area got respected many times, which was 1, 2, 3, like let's say 4, 5, 6, 7, it got respected many times, and there was always the result of this shit dropping like crazy after that. Okay, so this right here is what you could have drew on this chart, which could have been some sort of trendline opportunity. You had the point A up there. You could have like your point B on like that tip of the wick, like right there. So technically, on all of these moves, you had lower high points forming the entire time period. To then kind of show you that the sellers are getting stronger in some sense, but at the same time, on the weekly time frame, you still had bullish momentum forming the entire time period. You know what I'm saying? So it was kind of like it was very confusing, but you have to kind of like keep an open bias the entire time, for what's possible. Okay, but seeing how it was at that same area that it got respected on many times, you could have already you always had in mind, that this right here was a possibility. But understanding that like on that daily time frame, you had lower high points still being formed, but also structures still being maintained. You had the sellers still getting stronger within the entire area, but at the same time, this area was actually good until this area actually broke right here. So when this area actually broke, right? Let's break this area down real quick. You had your SMA and EMAs crossed on this higher time frame, which was ever since this point, like right here. All right, you had that SMA and EMA crossed on a daily, which means all right here was more bearish type of momentum. All right, and on the H4 time frame, we had all 23.6s the entire time period within this entire point. So this could have been point A to point B, right here, 23.6. As you can see on that retrace, 23.6. Even when it actually came down to that new low right here, still 23.6%, which also was maintaining that bearish type of movement the entire time on your moving averages, but also this right here was the line that was pretty much shown on that daily time frame for your SMA and EMA cross as well. So anything that was beyond this point on the daily time frame was more bearish the entire time. So you can pretty much look for that kind of move. So it's always just, being able to adapt in new environments. You know what I'm saying? Like you got to always kind of like morph to whatever kind of market conditions that you're actually trying to trade for that certain amount of time. And don't think that much. Like I even noticed that like there's certain times when I try to think and I fuck up versus just reacting to what I know. You know what I'm saying? Versus trying to do like what I think. You know what I'm saying? When you start to think in trading, that's when you can add your opinions, which mean nothing within the market because you have no control over the market, versus actually reacting to what you're witnessing on that current chart and what the data is showing you on that chart. You know what I'm saying? It's all about just, going back to the basics. You know what I'm saying? Going back to the basics, because I know that the more you do learn, the more you're going to give yourself reasons to do certain things on the market. The more kind of research that you do on certain things, the more variables you're having within your analysis now. Like, oh shit, they said that Trump said this, now that means that. You know what I'm saying? Versus actually just going based off of what's actually happening on the current data on the charts. Like I don't trade fundamentals, but at the same time, I like to actually keep up on economics, micro, macro, and just kind of keep that open mind so I could keep on learning. But at the same time, like I try to keep things as simple as possible at times, because when I know too much, that's when things can get real nasty. I take a couple losses, that kind of thing, when in reality, I knew exactly what I was doing. But it's when my mind gets involved, that's when things get real iffy, because your opinions literally mean nothing. Trade what you think, trade what you see, and not what you think. That's like always the biggest thing. That's like something that was being preached. I was preaching that since like 2015. You know what I'm saying? Like, because I noticed that like when we start to apply what we think, that's when things get ugly. We start to put trend lines everywhere just to make things make sense. We start to actually, add let's say 895 moving averages because we seen so and so doing on Instagram. Like, what the fuck? You know what I'm saying? Like, it means nothing. You know what I'm saying? Because that's why at times even social media can be kind of scary as well, because you see all these people charts and everything else, and you pretty much can't really put a finger as to what they're doing. But at the same time, you don't know their motive for that certain kind of trade. You know, like, you don't know that they might be swinging. You know what I'm saying? So like, they might see drawdown. You know, they might be intraday trading. They might be scalping. But your mindset for that trade that they're doing is a swing trade. So technically, you're swinging and he's scalping, and you guys are, are not on that same wavelength. So technically, that's going to be like a loss for you. So that's why I always say, trust your analysis, your analysis, your knowledge, your skill. Like, whatever you're doing on the charts, you got to trust yourself, because at the end of the day, like, everybody sees the market differently. Everybody's motive for that chart is going to be different. You know what I'm saying? In some kind of way. So don't try to always involve somebody else's, outlook on the charts for your own, because, it could be a disaster for your account. You know what I'm saying? All right. And a quick thing on AU, like right now, I was going to do like real quick. This video is like up to like 2.7 gigs. So overall, it was on an overall downtrend opportunity the entire time. And once again, how I was doing like these like lower high points here. All right, minor lower high points, minor lower high points, minor, and then boom. You had this last one that actually came back up to retest 100% retrace, which was like right here. Let's put this area like right here, whatever. But on a higher time frame, such as that weekly chart, you had this area still being respected as well. So let's put this median like right here. So this right here was technically a point of resistance based off the weekly time frame, but at the end of the day, on the daily time frame, you still had lower high points that was still being created. So this area had to be broken for structural overall change, but this area was technically being respected on that weekly structure, which was a lot stronger than the daily time frame. So the entire time period that you had this entire counter trend happening, you had higher low points still being respected. I'm making like that uptrend type of movement, but at the same time, based on that weekly, this right here was that strongest area that had to be broken to actually, then change and shift this entire movement. But then that area was not broken, so things were still being respected. Especially when this moving average actually shifted back over to that bearish type of movement, which was right here ever since this point. Understanding that you were still on overall downtrend on that higher time frame, you were still looking for the bias that this right here was going to pretty much continue this overall bearish movement, because on the weekly you still had on the monthly you still had red over blue the entire time. You know what I'm saying? Still the entire time period overall bearish movements. So when this area actually happened, all right here, that minor retrace and whatnot, all these minor counter trends were still minor to the overall movement for what was going on, because the average movement, which was from here to here, technically was still overall bearish the entire time period. So let's even highlight this moving average all right here. All right there was still overall bearish ever since that shift happened within the momentum for this entire area. So while you were all right here, you were looking for that minor counter trend, which was just a little retrace, which was real sloppy. But at the end of the day, like, you wouldn't have had any kind of good selling opportunities until you pretty much went down to possibly even like the H1 to even analyze what was going on for that entire area. So that's when you could have applied and seen that since this right here was creating higher low points, let's see if we could possibly even draw a trend line opportunity, which was, always a possibility in this kind of move. So point A to point B on your trend lines. Let's see like what's possible. Line things up, put it on the tip of that wick, or try to line things up so it's closer to price action. Okay, so let's say we had this area for this point right here and this point right here. All right, so this area actually bounced until it pretty much came down to a previous level of resistance that was actually respected first, which was all the way like right here. That area was still being respected. And pretty much you had that shift in the momentum, which was all right here ever since this point. So ever since you had this point on, you had more bearish movements to actually fall along through for this entire area. But also this entire area all right here was still one big ass bearish variation that pretty much closed beyond the opening of that previous bullish candle, which was like right here, which said all right here was just more bearish with your momentum for the overall bearish to actually take this area down to continue the overall bearish movement of this entire trend. Okay, so that could have been like one opportunity. So at the end of the day, like it's just all just being able to adapt to current markets. And remember, like I have never ever even analyzed this area all right here like how I did, but you gotta always be able to adapt and know when to use certain tools at certain times to actually benefit from where the current market is. Okay, so yeah, so I mean that's about it for Confluence 3.0. Hopefully everyone loved this right here. Hopefully everyone loved the rants that I be doing. Like I don't even know like where I be going with it, but at the same time, you know, it's beneficial for that upcoming trader, that person that's pretty much trying to get their mindset right for certain situations that they might come across inside the market. And you got to always be able to pretty much have that mindset to pretty much, you know, like go through that good or bad situation, but also understand that like once I actually finish that move, I have to pretty much keep that mindset strong, because that next trade is as important as this current trade is. You know what I'm saying? Some people celebrate. Don't celebrate. You know, get a trade, exit a trade, move on. Win a trade, move on. Lose a trade, move on. Because at the end of the day, don't start to bitch up when you lose a trade because it's a loss. You know, because just because you see some negative, that means nothing. Keep on going. You know what I'm saying? The amount of loss that I've had in my journey, you know what I'm saying? Like a person would have quit, but at the same time, understanding like my vision for my future and like what I actually believe in within my skill set, I got to keep on going. You know, you can't cry over one lost trade. You can't cry over a couple losses, but then all of a sudden you're jumping for joy just because you have two, 3 wins in a row now. All of a sudden you're saying entry king and everything else. Calm down. Be humble. Be humble. Keep on going. Keep on going. Don't celebrate. Just keep on going. Keep on going. Keep on going. Because that's not going to be your last trade. Because if you celebrate, you just fucked up, because you might think less on that next analysis. Okay? So always try to just keep that mindset strong the entire time period that you're trading. Keep that mindset strong the entire time period that you're not trading. And whatever you do on the outside world is going to be the same thing that you're going to be pretty much applying on the charts. You know what I'm saying? So always keep your trade plan strong. Always keep your mindset strong. Always keep how you're living strong. Remember to fucking withdraw, and build that bank account first before you start to fucking try to build a big ass trading account. You know what I'm saying? Bank account is the most important thing. Okay? Start to change your life. You don't need much to change it. And then yeah, start to build things up. But I'm gonna catch y'all on the next Confluence video. Who knows when that's gonna be? 2019. Who knows? You know. So I'm gonna catch y'all, and always try to leave feedback on all these Confluence videos. I appreciate that. And yeah, peace out, and happy 2019 upcoming. Peace out.